Since 1965, Warren Buffett has written a letter to the shareholders of Berkshire Hathaway, the investment company he runs alongside his right-hand man, Charlie Munger. These letters have been a great source of wisdom and valuable investment advice not only for Berkshire Hathaway investors, but to many people who love to learn from the Oracle of Omaha. We are now privileged to have the latest annual letter with the results from 2022 and a lot of lessons to be learned. Welcome to The Eighth Wonder, a channel dedicated to making compound interest your best interest. Warren starts the letter off by comparing the performance of Berkshire Hathaway with the S&P 500 from 1965 till 2022. So if you've ever wondered why Warren Buffett is known as the greatest investor in the world, then this is the evidence to back up that claim. With an overall gain of over 3.7 million%, he makes the S&P 500's 24,000 plus percent look very tiny. This is evidence of the power of investing for the long term. He then explains that Berkshire Hathaway invests money in two ways, the first being buying up 100% of businesses so they have full control over them, and the second way being buying up stock of publicly traded companies, which is what I would like to focus on a bit. This is what he had to say about these investments. Holding these investments, we have no say in management. Our goal in both forms of ownership is to make meaningful investments in businesses with both long-lasting favorable economic characteristics and trustworthy managers. Please note particularly that we own publicly traded stocks based on our expectations about their long-term business performance, not because we view them as vehicles for adroit purchases and sales. That point is crucial. Charlie and I are not stock pickers. We are business pickers. The lesson we can learn from Warren here is that when they buy up stocks, they don't just look at the purchase as buying up a piece of business which can give them a quick return, but are interested in making money for a long term, which is why they consider the company's management too, which has a huge impact on future performance. This is a great lesson for investors to learn, as many people make the mistake of buying stocks for quick returns but never really think of the company's long-term performance, and that's what causes them to never really see good returns. The value of buying stocks comes from understanding the business, not from trying to become a skillful stock picker. The next thing I would like to touch upon from the letter is what Warren had to say about decision making and his decisions over the years. This is what he had to say. In 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so. In many cases, also, bad moves by me have been rescued by very large doses of luck. He went on to say, our satisfactory results have been the product of about a dozen truly good decisions. That would be about one every 5 years, and sometimes a forgotten advantage that favors long-term investors, such as Berkshire. He then gave some examples of how this has played out for Berkshire, which he referred to as the secret sauce. He talks about the famous holding in Coca-Cola and American Express, and this is what he had to say about them. In August of 1994, yes, 1994, Berkshire Hathaway completed its 7-year purchase of the 400 million shares of Coca-Cola we now own. The total cost was $1.3 billion, then a very meaningful sum at Berkshire. The cash dividend we received from Coke in 1994 was $75 million. By 2022, the dividend had increased to $704 million. Growth occurred every year, just as certain as birthdays. All Charlie and I were required to do was cash Coke's quarterly dividend checks. We expect that those checks are highly likely to grow. American Express is much the same story. Berkshire's purchase of Amex were essentially completed in 1995 and coincidentally also cost $1.3 billion. Annual dividends received from this investment have grown from $41 million to $302 million. These checks too seem highly likely to increase. These dividend gains, though pleasing, are far from spectacular, but they bring with them important gains in stock prices. At year end, our Coke investment was valued at $25 billion, while Amex was recorded at $22 billion. Each holding now accounts for roughly 5% of Berkshire's net worth, akin to its weighting long ago. Assume for a moment that I had made a similarly sized investment mistake in the 1990s. one that flatlined and simply retained its $1.3 billion value in 2022. An example would be a high-grade 30-year bond. That disappointing investment would now represent an insignificant 0.3 of Berkshire's net worth and would be delivering to us an unchanged $80 million or so of annual income. The lesson for investors: the weeds wither away in significance as the flowers bloom. Over time, it takes just a few winners to work wonders. And yes, it helps to start early and live into your 90s as well. I really love what Warren had to say here. He shows us what the power of compound interest, the eighth wonder of the world, can do for you when you invest in the right businesses. He also highlighted how these wonderful returns we see came from good decisions made just once in a while. You don't need to always be making great decisions in order to make great returns. Not very many people are even capable of doing so. So don't be too hard on yourself. Just stick to the basics and you'll be fine. I find it particularly interesting that he mentioned how Coca-Cola and American Express represent only 5% of the entire portfolio. This goes to show that he has held true to his investment philosophy and has managed to make a lot bigger returns from other investments too. That being said, according to the current valuations, it means that from 1994, they've seen about a 20x growth in the value of Coca-Cola, and from 1995, a growth of about 17x in the value of American Express. These are some impressive numbers. The next lesson from the letter is on stock buybacks. Here's what he had to say. A very minor gain in per share intrinsic value took place in 2022 through Berkshire share repurchases as well as similar moves at Apple and American Express, both significant investees of ours. At Berkshire, we directly increased your interest in our unique collection of businesses by repurchasing 1.2% of the company's outstanding shares. At Apple and Amex, repurchases increased Berkshire's ownership a bit without any cost to us. The math isn't complicated. When the share count goes down, your interest in our many businesses goes up. Every small bit helps if repurchases are made at value-accretive prices. Just as surely, when a company overpays for repurchases, the continuing shareholders lose. And sometimes, gains flow only to the selling shareholders and to the friendly but expensive investment banker who recommended the foolish purchases. Gains from value-accretive repurchases, it should be emphasized, benefit all owners in every respect. Imagine, if you will, 3 fully informed shareholders of a local auto dealership, one of whom manages the business. Imagine further that one of the passive owners wishes to sell his interest back to the company at a price attractive to the 2 continuing shareholders. When completed, has this transaction harmed anyone? Is the manager somehow favored over the continuing passive owners? Has the public been hurt? When you are told that all repurchases are harmful to shareholders or to the country or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue. Characters are not mutually exclusive. That last part was a slight jab at policymakers looking to make certain changes that would affect stock buybacks and increase the taxes that would then have to be paid. Anyway, if there's one thing we can learn from this is that stock buybacks, when done right, can be very beneficial to you as an investor, so don't be scared when you hear about them. Embrace them instead. They will profit you. It's important to keep educating ourselves so that we can make informed decisions that will benefit us in the long term. We can benefit greatly from learning from those who have already walked the path and have the experience necessary to be a guiding light. With a track record like Warren's, you can be sure that what he tells you is actually something valuable. There are a lot of lessons that you can learn from this letter, but I felt like these particular lessons would be the most beneficial to learn. I will link the letter in the description of this video so you can go through the rest of it and maybe learn a thing or two that I didn't include here. And just like that, you now know a little bit about the contents of the latest Berkshire annual shareholder letter from Warren Buffett. I'll very likely discuss some further lessons from this letter in future videos, so make sure that you're subscribed and have your notifications on so you don't miss those uploads. Do let me know what your favorite lesson is from the video by leaving a comment below. Also, leave a like if you found value in this video and share it with a friend, as this helps to get the video to more people, which in turn will help them learn all these valuable lessons. Thanks for watching. Hope to see you on the next one. But until then, stay invested.